again, this all real estate all comes down to location, location, location. And in the next 6 months, you will see as the tide starts to go down, you will see everybody standing either wearing their pants or they're going to get caught with their pants down. And location really is everything. So look, here's the deal. Like from an investment perspective, can you find ways to make money in the residential single family space? Sure. Should you buy a residential home as somebody who's renting? Sure. You've got multiple tax benefits. You're not going to try and time the market. The average home buyer, residential home buyer, lives in a home for 7 years. You know, my advice there, keep your payments down. Do a 7-1, 10-1 ARM on a 30-year amortization. And, you know, my bet is rates aren't going to go further up in the you know, medium to long term. I think a 10-1 is a safe bet. You know, you're probably looking at a 3.5, you know, 3.5, 3 and 3/4 rate there. And this gives you a little bit more flexibility and you can control your payments. Now, if you're in a situation where you potentially could lose your job, that's a problem. So if you're going to buy a home, do not utilize your retirement plan money, your 401k, and take a loan out and start to sell your other investments at the worst possible time for a down payment of a home. And a lot of people were doing that. I would highly advise, do not do that. Use any savings you have and make sure that you've got a runway to at least pay your bills for another 6 months on the residential home side. I for sure think it's much better than renting, as long as you have the money on the back end and you can at least plan if stuff hits the fan. I think that's really, really important. Look, long-term residential owners, you know, it's kept up with inflation. Before we got into this crazy real estate craze, real estate returned 0% when they were real returns compared against inflation. So again, you've got depreciation, you've got these other tax benefits, and you're not throwing away money with rents. Yes, absolutely buy. And from a residential perspective, if you're an active purchaser of rentals, sure, if the numbers work and you're cash flowing, maybe be a conservative in your underwriting and drop those rental numbers a little down, because guess what? Supply is coming to the market.